prices, which more than offset a 7.5% decrease in natural gas prices. We don't hear as much about natural gas, but it's in the mix. Both the price indexes for petroleum and natural gas fell for the year ending in March, declining at 41.1% and 59.1% respectively. All import, excluding fuel, the price index for non-fuel imports continues to trend down in March, decreasing 0.4%, followed by a 0.3% drop the previous month. Non-farm import prices have not received a monthly increase since the index rose at 0.1% in July of 2014. In March, lower prices for non-fuel industrial supplies and materials, food, feed, beverages, each of the major finished good categories, contributed to the overall decline in non-fuel import prices. Prices of non-fuel imports fell 1.9% over the past 12 months, the largest year-over-year decrease since the index declined to 3.1% between October 2008, as the Depression set in, and October 2009. Exports. All export price index for U.S. exports ticked up 0.1% in March after declining 0.2% the previous month. March uptick in overall export prices was driven by higher non-agricultural prices, and was the first month advance since the index rose 0.1% in July of 2014. The last time overall export prices advanced more than 0.1% was a 9-10% increase in March of 2014. Despite the March 2015 advance, U.S. export prices fell 6.7% over the past year, the largest 12-month drop since the index declined 8.3% for the year ending in 2009. In the heart of the Depression, agricultural exports, prices for agricultural exports decreased 1.7% in March, following a 2.1% drop in February. The March decline was led by a 5.9% decrease in meat prices, a 5% drop in fruit prices, and a 2.2% decline in nut prices. Export agricultural prices fell 15.5% over the past 12 months, the largest year-over-year decrease since the data index declined 16.7% between September of 2008 and September of 2009, again in the heart of the Depression. Agriculture export prices for agriculture exports decreased 1.7% in March, followed by a 2.1% drop in February. The March decline was led by a 5.9% decrease in meat prices. We already did this one. And all exports, excluding agricultural non-farm prices, rose 0.2% in March after ticking up 0.1% the previous month. The March increase of 0.2% rise matches it in 2014. The March 2015 increase was driven by higher prices for non-agricultural industrial supplies and materials, despite the recent advances of the price index for overall non-price decline of 5.9% for the year ending in March. Import prices. Import prices by locality of origin. The price index for imports from China fell 0.1% for the second consecutive month in March. Prices for import from China declined at 0.5% over the past 12 months. From Japan, it edged down 0.1% in March after declining 0.2% in February. The price index for imports from Japan has not recorded a monthly advance since the index rose 0.2% in March of 2014. Decreased 2.2% over the past year. Import prices from Canada and Mexico also declined in March, decreasing 0.6% and 0.2% respectively. Price imports from the European Union, no change there in March. Non-fuel industrial supplies and materials. Non-fuel industrial supplies and material prices declined 1.3% in March, following a 1% decrease in February. The March drop was driven by a 3% decline in unfinished metal products, and a 0.7% drop in chemical prices. Finished good prices for each of the major categories here. The index for consumer goods and automotive vehicles each declined 0.3%. Consumer good prices have increased 0.3% in February, while in contrast, price for automotive vehicles fell 0.3% in February. In March, capital good prices edged down 0.1%, following a 0.3% decline in the previous 2 months. Food, feed, and beverage decreased 1.1% in March after recording no change in February. The March decline was led by 6.5% decrease in meat prices. Lower prices for coffee, fish, shellfish, feed, and grain also contributed to the overall drop. Transportation services, import of airline passenger fares, we talked a little about that in the tax part here, fell 2.4% in March, following a 2.5% drop in February. March's decline was led by lower European fares, while the drop in February was driven by lower Asian fares. Despite recent declines, import air passenger fares rose 0.5% over the past year. The price index for import air freight increased 3.5%. In other words, the cost of transport is more. In March, the largest 1 month advance since the index rose 5.8% in May of 2011. Despite the March increase, import freight prices fell 1.6% over the past 12 months. Export prices. Non-farm industrial supplies and materials increased 0.7% in March after advancing 0.2% in February. Both increases were driven by higher fuel prices, which rose 4.9% in March and 3.7% in February. Finished goods exports, automobile prices ticked up 0.1%, following a 0.2% decline in February. The index for capital goods and consumer goods each recorded no change in March. Prices for capital goods have risen 0.2% the previous month, while consumer good prices fell 0.5%. Transportation services, export air passenger fares advanced 1.6% in March, following a 13.3% decline in February. The March increase was led by a 3.1% rise in Latin American Caribbean fares for the winter season. Overall, export airfare fell 6.7% over the past year. Export air freight prices declined 1.7% in March after a 1.8% drop in February. Despite these declines, prices for export Air freight rose 4.1% over the last year. A little rise there. But basically speaking, if you look at Europe, look at China, etc., as far as exports are concerned, they have fallen. Only slightly, but also we have Japan in the mix here, and import prices from Canada and Mexico declined also. So in other words, the U.S., as far as import prices, it costs less because of the strong dollar. And of course, U.S. Goods would cost more because of a strong dollar there, and the other currencies are weaker. So it is a mixed bag if you look at the import-exports. Let's get the summary from Reuters. U.S. import prices fell in March as petroleum costs were offset by declining prices for other goods. Economists polled by Reuters had forecast import price slippage at 0.3% after the previously reported 0.4% increase in February, running the 12 months. Purged 10.5%, the largest drop since February of 2009. We talked about that. Lower crude oil prices, a buoyant dollar, have dampened price pressures, leaving inflation running well below the 2% Fed target. And this will contribute to when the Fed will raise rates, also with the unemployment figures, whom we'll get to in just a second here. Officials at the central bank, some of whom have shown a willingness to consider a rate hike in June, view the low inflation environment as transitory. But the combination of low inflation and weak economic growth in Q1, which we're in now, prompts many economists to push back their rate hike expectations to late in the year, which does sound logical. Some economists believe monetary policy tightening will only begin in 2016. We agree there, and that's only a tentative agreement. The Fed has kept its short-term rates at near zero since 2008. In the heart of the Depression, crude oil prices have lost more than half of their value, and at the same time, the dollar has gained 12% against currencies of the major trading partners. Bank of America, Merrill Lynch estimates a strong dollar will cut about a half percentage point off of both economic growth and inflation in 2015. Last month, we talked about petroleum. Won't get into that. And we covered this pretty good, actually. Sometimes behind the numbers that you don't actually get are things that are very much, as they say, hidden away. And see if we can find one other. It's over here. This is the text. Just a second here. This is from the Department of Labor. Seasonally adjusted unemployment insurance weekly claims the week ending the 4th of April. The advanced figures for seasonally adjusted initial claims was 281,000, increase of 14,000 from the previous week. The previous week level was revised down by 1,000 to 268,000. From that, to 267,000. Four-week running average, which is really more important for us, is at 282,250, a decrease of 3,000. Not very much there. And let's see, the seasonally adjusted insurance unemployment rate was 1.7% for the week ending in March 28th, unchanged the previous week. The advanced number for seasonally adjusted insured unemployment during the week ending in March was 2,304,000, a decrease of 23,000 from the previous week. This is the lowest level of insured unemployment since December of 2000.